But first, was it Apple Day? Was there something going on?
Yeah, a little bit.
Cupertino, California. I think it was. Josh Lipton gets us up to speed with all the releases today. Hey, Josh.
So, Melissa, Apple's biggest day of the year is over. So what did investors learn today? Well, you saw Apple CEO Tim Cook. He took the stage and introduced 3 new smartphones. So that include the no lower priced iPhone 11, faster processor, 6.1-inch display, better battery life. One interesting note there, the price, $699. So about $50 cheaper than its predecessor, the XR, which, remember, is Apple's bestseller. Then on the high end, the iPhone 11 Pro, that's $999 with a 5.8-inch display, and the iPhone 11 Pro Max at $1,099 with a 6.5-inch display. All those phones shipping on September 20th. The analysts are starting to weigh in. Piper's Mike Olson, who is overweight the name, saying he actually expects a muted reaction for these new phones, but he's telling his clients, listen, as long as new iPhone hardware and services can perform well, he thinks that does tide investors over until 5G hits. Now, it wasn't just iPhones. There was a focus on wearables today, too. We did see that new watch. It's going to start at $399 and $499 with 4G network connectivity. Comes with new features like the always-on display. That just means you're going to be able to see time and notifications when you haven't raised your wrist. That lands in stores on September 20th. And finally, we did get more details on those new services. So Apple TV Plus rolling out November 1st. It's going to cost $4.99 per month for a family account. That did surprise some, since we saw those reports which suggested Apple was at least weighing $10 a month. And then Apple Arcade, the game subscription service, launches September 19th, also for $4.99. Michael Pachter of Wedbush reminds us Apple is attacking a big market out here. There's 1.5 billion people who play those cell phone games. Melissa, back to you.
Josh, thanks. Josh Lipton and Cupertino. So that raises a few questions here. Is Apple's aggressive TV pricing enough to accelerate growth in services, which, of course, has been key to the bullish Apple story? And are the new devices enough to keep investors around until the big 5G upgrade next year? Pete, what do you think?
Yeah, I would expect so. I mean, I think services has been the focus for the last couple of years. We've all talked about it. Now it's over 21% of what they actually have for revenue this past quarter, which was a record-setting quarter once again, which for third quarter, which was amazing. Yeah, Mel, I look at this, and he mentioned wearables, and he almost kind of sped past that, actually. And I think that's the focus now. I think services are back, years ago. Now I think you look at wearables, and the wearables growth, the growth rate that they've got there, and you look at the margins, and you're talking about a 4G watch that has connectivity the way it does. I mean, there is so much to this story, and the health aspect of everything that they're doing right now. This is a much bigger story than anybody understands, and sooner or later, one of these days, we're going to hear everybody talking about wearables. I'm telling you now, and I've been saying it for a while, wearables is the spot that's going to push Apple higher.
Well, the wearables could also be a key to another services stream, which we haven't seen yet.
Well, you brought up the health, Pete. I think you're right on that. Wearables, to me, is all about services. It's all about the ancillary uses of the phone. I think that the price dynamic, so hearing $50 cheaper, is very important. I think it's very important for iPhone shipments where the expectations are so low in terms of at least any growth. And so the year-over-year comps are not terribly difficult, and they're not supposed to get better. But I think this is a bit of a surprise, frankly. And I think, if anything, you could start to see expectations for iPhone shipments to at least be kicked up a bit higher into the holiday season. I think $50 actually makes a difference for a lot of people buying this phone. I know that sounds crazy, but rather than them raising, they have a phone now that's actually affordable relative to the talent out there and to some of the peers.
Okay, so let's play this out then. Okay, so they cut the price on the phone, so they were able to boost units, which we don't get the number of units anyway. Revenues go up, or revenues stay about the same because the price is lower. And how does Wall Street react when the ASPs are lower?
I think okay, because I think this phone is sort of a placeholder, right, until we see
they get a
much bigger launch. I think they do. When you were talking about price, I thought you were going to say talking about the TV business. That price I found the most interesting thing of the day, right? And so I think that it really furthers the evolution of this being a services business and getting that multiple. I think they're going to get. I was pretty kind of poo-pooed when they announced this 3 months ago.
Right.
Really, what was it going to be? And I feel a lot more optimistic about what that revenue stream could be now.
Because of the pricing.
Because of the pricing.
Yeah.
Right. Remember when Disney did that, right?
Oh, right. Yeah.
Okay. And so now, and interesting to see how Netflix responded today.
Netflix,
Stock.
Disney, Roku.
Right.
Exactly.
Yeah,
All of them getting
yes.
slammed on the back of this aggressive pricing.
Yeah, we can argue
Right.
that maybe Roku isn't over, but we'll talk to that, I'm sure, later in the show. But in terms of Apple, one of the things we've said, stock has traded really well when compared to Facebook, which hasn't traded all that well now for the last 4 weeks or so, and compared, I guess, to a certain extent, to Amazon as well. I mean, Apple's really hung in there well. So you have to ask yourself, what's the level you need to look at? And again, I'll say that August 2018 high, which was on or about $229, you're within, 5%, less than that now, percent of getting to those levels. It probably makes a run as we go into their earnings release. So Apple's traded really well. To Pete and Tim's point, healthcare is an entirely new vertical that if they can integrate and get in even in a less than meaningful way, it's a tremendous opportunity for them. So I think 229 is the level we got to look at. It feels like it's going to get there in the foreseeable future.
I'm curious, show of hands, based on today, more bullish on Apple than 24 hours ago? Yes? Raise your hand.
The same. Is the same okay?
No, I'm easily more bullish. I think
More
the fact
bullish.
that this
So 3 are more bullish.
The watch is going to be something that I think is going to be much more. I mean, we talk about accelerated, and the acceleration is really coming out of wearables. And when you look at this new watch, I think that is a game changer for them. I think over time, we are going to start seeing now the phone is already less than 50%. Everybody used to say, well, how are they going to survive? I mean, the phone's everything. No, it's not. And that's going to continue to fall back down, even with the pricing. I think we're going to see that number in terms of the revenue going to continue to be a little bit lower and a little bit lower. And where you see the wearables, $499 for the watch, really? I mean, I think that's unbelievable that they're able to get that. And because they will, Mel, I think those margins that they're getting there.
You got a big old watch on your left hand.
Yeah, mine's all jewelry, man. My phone tells me what time it is. But I do love what the watch does. And the health aspect of what this watch does now at $499 is absolutely a game changer. It is absolutely something where it's connectivity to all kinds of different areas if there's a problem in life or whatever, and monitors your health to a whole new degree.
So at what point is Apple fully valued? After this run most recently?
But because the whole story to me is about a multiple re-rate. So I don't think we know the multiple. And again, I talked about the blended multiple. I'm not the one that invented this. Every analyst on the street is now giving you a hardware multiple, of which you're probably 11 to 12, and a services multiple, where you're anywhere from 20 to 30. I'll call it 25. But overall, for a company that also has all of these levers on the capital market side, they're giving you cash back, they're buying back stock, they're able to actually execute in a low-rate environment and actually do things with their balance sheet. Those are things that people don't really understand, and that's EPS accretive when they're buying back stock.
Why are you Debbie Downer on this?
I'm not. I mean, why am I Debbie
You're
Downer?
the only one who stays the same. Yeah,
Because
I
said yesterday I thought the stock traded well. I'm more bullish today than yesterday.
No. But why are you not any more bullish? Why is the story not changed?
He actually looks sad. You picked on him. Look at him. He looks sad.
No, I look sad. I mean,
so.
I could be more bullish. We've said it over the last couple of weeks that the stock has traded really well. So maybe I'm not bullish enough, I guess. Is that the answer? But in terms of re-rating, if you want to play the math game, we can do that. I mean, they're going to make close to $13 a share next year. Let's call it $12.80 or so. You slap a 22 multiple on it, and they've never gotten that. But if you're moving towards that, it's a $280 stock, which I don't think is that unrealistic in the environment that we find ourselves.